You earn more than your parents did at your age. On paper, you're doing better, and yet money feels tighter, more fragile, more stressful, not in a dramatic way, just a constant background pressure. That uncomfortable feeling is the starting point of this story. Let's picture a very normal situation. You're in your late 20s or early 30s, living in the US or Europe. You have a decent job. Nothing flashy, just respectable. You earn, say, $65,000 a year in the US, or 45,000 euros in Europe. Your parents at the same age earn far less. So why do they remember life feeling simpler? Start with what actually reaches your bank account. After taxes, healthcare, and mandatory deductions, that $65,000 might become around $3,800 per month. In Europe, 45,000 euro might land closer to 2,500 euros to 2,800 euros. This is your real income, not the number on your contract. Now look at where it goes. Rent or mortgage first. A modest apartment in a decent area can easily be $1,400 or 1,100 euros. Not luxury, just normal. Then transportation, a car payment, insurance, fuel, maintenance, maybe $450 a month, maybe more, or a finance car that felt affordable when you signed the papers. Now student loans, not aggressive, just always there. $250 a month, 200 euros, quiet, constant, utilities, phone, internet, subscriptions. Another $300 disappears without any drama. Before food, before savings, before life, more than half your income is already gone. And this is where things get interesting. The problem isn't that you're irresponsible. It's that your spending grew invisible. Your parents lived in a different system. Housing was cheaper relative to income. Cars were simpler. Credit existed, but it wasn't woven into everyday life. Today, credit is everywhere. It doesn't feel like debt. It feels like a lifestyle setting. You don't buy a car. You choose a monthly payment. You don't feel the phone's cost. You feel $39 a month. You don't notice lifestyle inflation. It happens quietly, upgrade by upgrade. The mistake isn't overspending. It's outsourcing decisions to monthly payments. Let's look at one simple example. A $32,000 car financed over 6 years. At a normal interest rate, that car might actually cost you around $38,000. That extra $6,000 doesn't hurt once. It hurts slowly, monthly, invisibly. Now imagine that money invested modestly over 20 years instead. Not aggressively, just boring and steady. That same $6,000 quietly becomes $20,000 or more. This isn't about math brilliance. It's about time and direction. Most people don't lose money dramatically. They leak it consistently. So why do smart, educated people accept this? Because humans compare lifestyles, not balance sheets. You don't measure yourself against your parents' savings rate. You measure yourself against coworkers, friends, and online norms. A normal life today includes things that used to be luxuries. And once something feels normal, questioning it feels uncomfortable. There's also a deeper psychology at play. When income rises, the brain looks for confirmation of progress. Bigger apartment, nicer car, better experiences. These purchases signal success, but they also lock in future obligations. Your income grew. So, did the baseline cost of your life? That's why money feels tighter. If this pattern continues untouched, the long-term effect is subtle but serious. You don't fall behind suddenly. You just stay dependent on your next paycheck longer than expected. Savings feel optional. Flexibility feels distant. Work feels heavier. Not because it's harder, but because it's necessary. This is how people earning good money still feel financially stuck. Financially intelligent people don't behave radically differently. They just think differently. They focus less on what they can afford monthly and more on what their future self is committing to. They don't ask, "Can I pay this?" They ask, "What is this delay?" They don't chase the cheapest option or the nicest one. They chase breathing room, not wealth as a status symbol, but as reduced pressure. If money feels tighter despite earning more, it doesn't mean you failed. It means a system change, and no one explained the trade-offs clearly. Awareness is the real advantage here. Not guilt, not extreme sacrifice, just clearer thinking. If this kind of calm, honest perspective helps you see money differently, consider subscribing or liking the video. No pressure, just clarity.